Good morning, good morning. Hey, Johnny, how are you? Mr. Mother Truck, how are you? Good morning, good morning. Hey, Timo, what's going on? Oh boy, folks. Well, we finally got some liquidation. Let's see here of this. There we go. Bit of a delay this morning with the YouTube. Apologies for that. Okay. Hey, Raj, how are you? Alrighty. Well, folks, we finally had a liquidation. We finally took out this low, and we took out this low yesterday. So that other low is around 58. Man, it's really slow, isn't it? Oh, now it's drawing in. So that low right there, and then the one next to it at 58.60, we took that one out as well. And let me see here. Whoop. Once we took out those lows, all of the inventory above, see this blue line here? It's about 58.75. All of the inventory above that blue line started to fall out. Now, this market has a ton of trap shorts. And the one good thing about that is there's bids when it falls apart. But the other problem is the price action is really, really slow and kind of shaky on the way down, you know? So we've got all of this now trapped long, and it's finally selling out. There's not that much selling at this time of night, 2:30 in the morning. So what the market is doing is it's taking the liquidating inventory of yesterday and selling it above yesterday's close just to get rid of, like, say you were a dealer and you had to take in, right? Maybe you had to take in 15, 20,000 contracts, right? Because it's your job to buy, right? You're a liquidity provider and you have an exchange agreement, so you have to buy. It doesn't tell you where you have to buy, so you buy at the bottom of the range, and then you try and get rid of it at night. And that's exactly what's going on right now. So overnight inventory is a little bit long. It's about 70, 80% long. And all they're doing is they're getting rid of what they had to buy under 58.60, above 58.60, which will kind of cause some slow trading for us because as you get higher, there'll be resistance. So what we're looking for, once again, it's going to be a slow Globex for the first little while this morning. You can see the tight range. There's the close at around 58, 59. All of the trading is above it. So it's just going to go back and forth until some more customers come into the store. Now, do we have news today that's anything relevant with the news? I hadn't even checked. I think we have. It's Thursday, right? So there's some sort of an employment figure coming out. Other than that, it's been a pretty quiet week. We're going into we're going into a long weekend, so there'll be some short covering in the overnight session. What we want to really concentrate on. Hey, Howard, how you doing? For people who are short biased, your first target is that overnight low, and then the next target is that previous day low, yesterday's low down here at 58.48. That's really what we're concentrating on the downside. Right now, we're just getting rid of inventory. So for us, those of us who want to scalp, best thing to do is just draw out our balance zones. And my balance zone this morning is 58.61 and 3/4 to 65. And if you're wondering how I found that, it's pretty simple. I was just looking at these highs, right? And these lows, and just that back and forth here. You look below that low, you go to that high, right? You can't take out that high, you come right back to that low. Was last year really slow in the weeks around Memorial Day? Oh, thanks, Moran. It's bad to admit, but I've been doing this so long that all the years have sort of melted together. I mean, I remember COVID. I remember, was it 2016 or 2017 when the Chinese market went down and took us with it. But it all sorts of gets mushed together as the decades go by and as I get older. You know, it's crazy. So we've got VWAP down here at 58.64. Sorry if I sound a little. Once again, I stayed up late. I was watching that movie. Have you ever seen that TV series? It's called Trust. It's about the kidnapping of John Paul Getty's grandson. Oh my God. I was like binge watching it. Anyway, that guy was so cheap he had a payphone in his house. If you wanted to use his phone, you had to like put a quarter in it. Now that's cheap. Oh my goodness. We got a seller right now at 58.69. We've got sellers above here. So we're taking what we have in the blue zone and we're distributing it in the green zone. We dipped into the blue zone a couple of times, so those are look below and fails. Um, because we've traded only 51,000 contracts so far before London opens, it's a little slow, but it's tradable. It's not bad. It's not bad. Right? We have, there's a couple of trades you could have taken here, but I mean, let's face it, they're not huge trades. The zone is only 4 points, 3, 4 points. Doubling it, you know, takes out a little bit. So we do have sellers as we come up here. Let's see if we can break through that area. Everyone is on a huge boat. That's right. Isn't everyone's on Jeff Bezos's luxury yacht? We did not get an invitation. So that's pretty much it for this morning. Every day I do the same thing. I set up my balance zones. I look at where the inventory is, right? So if you look at the inventory is above us, right? We finally got a liquidation, right? So all of that inventory is above 58.80. And that's why when we start coming up to 58.80, we get resistance. Right? So this way you can manage your expectations, you can manage your trades, and you don't waste a lot of time. Now for traders who are new and just joining the stream, we kind of do things a little differently in our trading room at the Trading Syndicate and the way that we teach. A lot of people have been traditionally trained in technical analysis and indicators and those things. But what I like to do is I like to teach people how a market works so they can actually figure out what the hell's going on. And if you can figure out what's going on, you're more likely to trade on the right side. You're more likely to trade at the right time. And you're more unlikely to do business when the business really does not suit retail trading. So when you come into the market as a retail trader, you'll kind of look at this and go, okay, there's a trade here, there's a trade here. There's nothing to do here. There's really not much to do here at all. There's a trade here, there's a look below and fail. This is untradeable. This is really untradeable, right? So, and you can tell that just by looking at the chart. You don't need any fancy indicator or, and it doesn't matter what time of the day or night it is. Once you look at a chart and you understand what's going on in the chart, you'll understand, hey, I should not be trading here. That's not for me, right? This trade here is for me. This one's okay. This one's better, right? This, there's nothing to do. Here, there's really nothing to do, right? And if you can get used to that, you won't be sitting and wasting time. Does that make sense? Is that helpful? Because one thing I know is that, and if you want to use numbers, they say, 95% traders don't make money. I can tell you with certainty that it's more like 100% of retail traders don't know when not to do business. They're always trading at the right time and they're pushing things. Like I'll come into the room and I'll see stuff. Hey Rich, how you doing? Like this, and you'll see people trading it. Oh, I'm long, I'm short, I'm long, I'm short, I'm long and short. And an hour later they're like, oh, I got stopped out like 6 times. Right? And they'll be really pushing it. This way, you don't push it. Don't trade in the middle, you know. And if you look at it from a technical analysis standpoint, it's sort of a little harder to figure it out. If you look at it from a practical standpoint, it's kind of simple. We really want to make our trading practical. That way you don't waste a lot of time, and even better, you don't waste a lot of money, you know? Let's see, we're going to knock up against that 71 area and see if those sellers are still there. Now, if those sellers there at 71, if they see bids, they'll start lifting their offer. It was actually a little off. I was off by a tick. See, that's right there. So they're seeing a bit of buying. They're going to lift those offers. What's wrong with this thing? And we'll be looking to see if 58.73 is reactive. So say you're long on the look below and fail of 65, right? Say you're long here and you sold some of your position in the middle of the zone, take profit, sell a little bit here. I would have orders on the way up, because if we fail to take out 73, at least you can get paid. Oh, it's good that you took some time off trading, Rich. That's really good. I mean, I got to give it to you. Doing 170 evals, that's some persistence. But once you stop trading and you spend some time looking and watching and observing, you'll start to see a lot of little subtleties that you just don't pick up when you're trading because you're attached to the outcome of the trade. It'll turn your trading around. Creeping up on 73. One tick away. And our overnight high is 74 and a quarter. Goodness me. It's all kind of in slow motion. Let's see here. So Monday is a holiday, right? Friday is the last trading day of the month. So month end is the 29th, Thursday. Yeah, and just so you guys know, next week I'll be gone Thursday and Friday over month end. Got to get the girlfriend out of town. She's been working 7 days a week now for 3 months. Got to get her out of town before she burns out. They're the sellers here at 71. What I always like to see too, if you're bored and you say you're not trading, this area here should be some sort of support because that's the rotation of the position underneath it. So we should come into this position and then lift out if there's proper buying. So this is helpful. Like if you're a short seller and say you shorted 72, 71 and a half, you're out 73, right? And what you're looking for is can we accept back under 71? And if we can't, then it tells you that the market, the size traders, the wholesalers, they don't need to sell under 71 because there are buyers there. So by watching what the sellers do will allow you to see where the buyers are. Because where the buyers are, they'll stop selling and move their prices higher. Right? That's just commerce. If there are no buyers at 71, 70 and 3/4, they will drop their offer down to 70 half. Does that make sense? It's really slow. You'll be able to see this now. Right? We might as well do this since it's so slow. Right? You might as well learn something. Right? So say we're short 72. Okay? If the sellers have to sell under 71, you'll see the offer like that come lower. And that's what you want when you're a short. Right? See how the offer is now moving lower? They've put it on sale. And that's exactly what you want when you're a short seller. See? There you go. Right? Now, if you get to understand how this works when it's slow, your eyes will be able to recognize it when it's a faster market. So you're short 72, put your stop at the top of that candle, and then you're going to put your cover, right? You'll put some bids here because this little back and forth, that's the next little cost basis, right? You can see the volume there. So if you're short 72, you can go and cover some at 69 and 3/4, right? Because if it doesn't get down there, what it's going to do is the offer will lift and come back up, right? If it breaks 69 and a quarter, you can stay short. There you go. So you put a little buy order here and see if they come down and hit you. Boom, there you go. Right? Next area will be around here. So this is really in slow motion. You saw it happen in real time. We told you what was going to happen in real time before it happened. So you knew what to look out for. Now what you do is you train yourself on that setup. Right? What's the signal? Right? The signal is, right? The signal is the market fails to take out 73, right? There's the top of that candle. Can't take 73. The next candle lower. The next candle lower. So now you've identified a seller. This is the front end of the move. This is the back end of the move. So this is the front end. This is the back end, right? So you always want to be shorting the back end of the move because now you have a place to put your stop. And if you lose the seller here, then the business reason for the trade goes away. So if you're shorting 72, it means that they need to sell under 72. That's how you can profit. If you're shorting 72 and the price goes up to 73, 73 quarter, 73 half, then you've lost your seller. Once you've lost your seller, there's no reason to be short. Right? So people who go, oh, it's too high, it has to go down, that's all BS. If there's no seller, there's no reason to be short. If sellers are not competing, there's no reason to be short. Hope that makes sense. Trades should make business sense, right? Once you understand the business reason for a trade, and the business reason here is that the sellers are putting it on sale, right? It's simple, right? If you ran a lemonade stand when you were 5 years old and you're selling lemonade for $1 and nobody bought it, you put it on sale, right? Once you understand that sellers are putting the product on sale, you can be short. When the sale is over, don't be short. Okay? The trade should make business sense. If the trade does not make business sense, there is no trade for you. This prevents FOMO. This prevents overtrading. This prevents all of that stuff that people blame for bad business habits. Now let's see what happens when London opens here. Nice. See? See how we're dropping into those areas that we looked at? Now if we can take out that level, your target will be 65. And look at that. Magically, there are buyers here as London opens. See how much information you can get off a simple 1-minute candle chart? It's crazy, right? It's insane. So if you were short 72, cover before London opens, right? Short 72, and say you held it down to 68. It's a nice trade, you know. It's not, you know, you're buying a Gulf Stream, but it is, 4 points. Start doing 4 points on 2 to 3 minis. Simple life, right? Now let's see if we can take out that 73. Remember, we're still getting rid of the stale inventory we took in yesterday. Right? Come on. Let's go. So balance, this is 2 times profit, and then you'll just go 4 times profit. It's all this balance, and you just keep doubling it. This helps you, well, first of all, because the levels work, right? So you have something to trade off of. The other thing is, if you're thinking of a long, and the market is up here, if the market is at 4 times cost, what is the probability of it going 8 times cost? Should you be looking to buy something at the top where everyone's, maximizing their profits? Right? It's like buying a car for $1 million and trying to flip it for 2. You want to try and buy it for 300 grand and sell it for $1 million. Make sense? You want to buy down in the cost basis and liquidate. That's how business works, right? You don't try and buy it here hoping it's going to go there. This is where you're looking for a look above and fail. I don't know. You guys are very quiet, so I have no idea whether it's sinking in or not. Let me know. Right? And that's why we do this way. It's simple. Right? Am I buying it where it's really expensive, or am I buying it where it's well priced? Right? And if I do buy it, then I can manage my expectations. So say I buy 58.80, well, maybe I'll get 84, maybe I'll get 88. Right? You're babysitting, Moran. How are you? That's good. Keeping you busy. So now we're poking our head above 73. If we take that overnight high, hello. The next structural place, according to market profile, do you see where that M high is? There, see how we took the overnight high? This will be your target. Now, something that's been happening is a lot of people are like, should I buy this breakout? This will help you determine if a breakout's holding. In a slower market, it should come back and test 73. So if you're looking for a long, right, and you're going long, and you're buying here, look, the levels are working nicely, 76.5 to the tick. Now it's going to come back. And let's see if it holds 73. Right? So if it holds 73, it should turn around and rotate back up. If it can't hold 73, then just give it a chance, right? To get buyers sucked into coming here. So here, do you see how the bottom of the candle didn't take out 73? That's a clue. Now watch for the next candle. Right? It's slow enough you should be able to see it. The buying are going to come from shorts that are trapped there. So there I bought 74 and I'm sold some at 75. I'm not expecting much, right? And I'll put my sell orders out. And if the market can go and take out those sell orders, that would be lovely. Otherwise, I'll have to start hitting bids. Okay, I'm out. I got a couple left. I'm offered at 75 half, right? Two left. I'll keep selling them at 75 half if they keep taking them. I sold one at a quarter. I'm offered at a half. I got one contract left. And I'll just sell into this strength. I'm flat. Right now, it could go higher, but it can go without me. Is the edge of a zone like balance? 2 to 4 consolidated a major crossover levels like highs, lows, etc. Um, I'm trying to understand the question, John. Sorry. I'm a little mentally slow here. Is the edge of a zone consolidated? Oh, okay. Well, see, because I think I'm a mechanic. So, John, my theory is if the market can stay over this level here, right? I'll show you how I think, and maybe that'll help. I know when we take out that X high, that anyone who is using that as an area for short covering will go and put bids in, like here. And that's why the price will get caught up. If there are enough bids there, it'll hit that area and then bounce up. If there are no bids there, if those buyers see sellers, they'll drop their bids like they're doing here, and I'll look for 73. I don't know if that's helpful. I'm thinking about the mechanics of what's actually going on. So I actually don't think about crossover levels. All I care about is who's transacting at that level at that time. I don't know if that's helpful. See, now I know that those 73 buyers, well, I'm trying to explain it to you. Okay, so I want you to pretend that you were short and you had a buy order here. And somebody hit that buy order and it got filled instantly. Well, your next buy order you drop lower, right? Because you know there's supply. Like if you're trying to buy back 500 contracts at 73 and you put a 50 contract buy order in and whammo, as soon as you put it in, boom, you're filled. Oh, there's a seller. Now, if you put in a 50 contract buy order at 73 and you're only able to get 20 contracts, now you know there's a lack of supply, right? Does that make sense? That's what you're thinking about when it goes to a level. Do they have to sell underneath that level? If they do, I'm not going to buy that level. I'm going to try and buy it here. Cool. That's all there is to it. There's nothing more complicated than that. So for a brief 5 minutes. For a brief 5 minutes, we had some suckers come in and buy from 73 to 76. We ran out of suckers, so now we've got to put the thing on sale back to where they were buying it at 69. Does that make sense? I mean, it's not a gentle way of explaining things. It's a little rude. But we only had suckers willing to pay over 73 for 5 minutes. Right? Once those suckers got their product, we ran out of suckers. So we had to go put it on sale because they refused to buy it at 73. They don't want to buy it at 71. Right? I mean, we own it under 60, so that's okay. We can sell it all the way down to 60 and still make a profit. But we'd like to sell it as high as we can. Does that help you guys visualize what's going on? You know, what confuses people is when the price goes up, everybody goes, oh, buyers are in control when prices are going higher. Like, what do you want, crack? What buyer wants to pay more? Right? Oh, the car's $5,000. Oh, let me pay 8. I'm in control. You think about it, it's stupid. Right? The sellers are in control when prices are going higher because they get to sell for more. Right? So when you run out of people who are willing to pay over that, you got to put the product on sale. This is a sales chart. Right? If you guys don't understand what a sales chart is, right? Try and visualize that this is a chart showing the sales of bananas for a 1 minute time, over a 1 minute time frame, right? If it helps you visualize. So we found some buyers at 68. So now we're raising price to see if those buyers will pay 70. It's a constant. That's why it's called making a market. You make the market dependent on the customers that are coming in so you can maximize profits. Sometimes business is slow and you have to mark down your inventory. It's very simple. It's very, very simple. Right? That's why they call it a market. So right now there's price competition at 71. We got to put it on sale. The smaller the candles get, the less people want to come in and buy. If you think about this just with a little common sense, right? If you think about the business of trading, it will actually really improve your execution. Because if you can keep it simple in your head, see, people overcomplicate it. Right? And then you put, like, I don't like to trade in the middle, but if you elected to do so, if you saw that there's a seller at 71, you'd short 70 and put your stop above 71. And then at this level is where you'd be doing some covering. And if it broke that level, then you'd be doing covering here. Right? So there's a business reason for taking the trade. There are sellers at 71. Oh, it looks like they're competing in lowering price. I'll go short. I'll put my stop where they started to compete, right? And then I'll put my buy order where they saw buyers before, right? So if I'm short 70 and a half, 68, 67 and a half, right? That's where I'll be buying it back. This way I can manage my expectations so I don't take delusional trades, right? Focus. You have to focus. Well, John, the zone is a cost basis. So if you went out and bought 1,000 oranges, you would pay a certain price for those. Then you double it. Don't think about value areas and stuff, John. Get rid of all that stuff. Clear out your head. I bought 1,000 oranges. I paid 10 cents an orange. I put them on sale at 80, 90 cents. When nobody wants to buy them at that price, I lower the price. Does that make sense? How you get your edge is you're understanding where the product's being sold, where it's being marked up, and where it's being put on sale. So you can follow the path of the inventory. It's not a barrier. It's a profit thing, right? Think of it. They're transacting where the buyers are coming in, John. They're transacting where the buyers are coming in. When the buyers see that the sellers are desperate, right? They'll drop their prices to try and get better prices, right? It's commerce. You have to think about this as commerce, not as a game, not as game theory, not as any of that stuff. You have to see it as commerce. And I think once you start looking at it as simple commerce, it'll be easier for you. Right? I've explained because you've been kind of out of the room for a while and back in and out. So now that you've got time, I would suggest that you go through the basic materials again because I explain, actually, I got a video for you. I'll send you this video 1 second, okay? It's probably a lot of stuff you haven't seen because you've been really busy. So you have not seen this. Let me just DM it to you. Where are you? There you are. Okay, it's in your DM, John. Yeah, I'm trying to stop the interrelated thing right now, Timo, because what's going on is it's confusing people. Because they don't know what a value area low or a value area high or a TPOC is. Those terms, as much as I love the traditional market profile people, that stuff is really confusing. A value area is simply a cost basis. Value area high is the high of the cost basis. We've got some time here, right? I know he uses that term value and a lot of people do, but let's try and simplify things, okay? All right. If you took this day right here, okay? We're looking at this day. right? This is the inventory of that day and the distribution of that inventory. This is what you guys call the value area, right? The blue crap, right? That is 70% of where the day's inventory is priced. Okay? If this was a car lot, this is where your really expensive cars are, right? This is, so you've got your Rolls Royces and your Ferraris up here, Mercedes here, right? And as you get down to, I don't know, whatever Lexus is here. Down here is where your clunkers are. Now, do you guys understand that reference? So value area, all value area is a fancy way of saying that's where 70% of your inventory is priced. So this inventory on this particular day is priced higher than here. So we took this inventory and we sold it for a profit. Does that make sense? See, if market profile people would just tell you, this is your inventory for the day, this is where 70% of it is priced, this is where the majority of that inventory is priced in your cost basis. Your cost basis is here. Value area equals cost basis. Cost basis is how much you can buy and then sell things for. That's all it is. So value area low is the lower end of your cost basis. High is the higher end of your cost basis. So here's where you got your Rolls Royces. Here's where you've got your Lexuses. And here is where you've got your, I don't know, what do you, Austin Princess? I don't know. Like whatever crappy cars you've got down here, right? That's all it is. That's all it is. Right? There's nothing more to it than that. So market profile people spend tons of time digesting information that doesn't actually help them make money. I love market profile because it's how I learned how to look at inventory. Inventory is the lifeblood of a market with order flow. You have an inventory of stuff. Order flow is a fancy-ass way of saying customers coming in to buy it or transact, right? And that's all we're doing, right? And we want to keep this as simple as possible. There's a reason why we want to keep it simple, so we can transact and execute without driving ourselves crazy. You talk in terms of commerce. It's all selling higher today than 2 days ago. Yeah, John, it's the inventory. So let's talk about commerce, okay? And that's why we look at larger charts. I'm just going to get rid of all these drawings. Maybe that'll help. So here, John, is where we acquired the inventory. Here is where we disposed of the inventory. And here is where people shorted inventory that didn't have it. So when the market comes back here, you'll expect those people to come in and buy. If there's a ton of selling, we will come right back into this original accumulation cost basis. So, John, this is accumulation, this is distribution, and when the market runs out of buyers, just like Walmart, they put the peanut butter on sale. And today the value area is lower than it was 2 days ago because nobody wants to buy it up here. right? This is a sales chart, and it shows you the acquisition and distribution of inventory. So this is a longer term drawing, John. All you have to do is understand that right now we've got a little bit of a sale. That's the only correlation you need to make, right? So you understand that people are long above where our current price is, so that's going to create a little bit of selling pressure, right? That's the takeaway. Then you use this chart to actually execute your trades. When you see that video, I think it'll be helpful because a lot of that stuff you missed because we do a session and you generally just joining us for the morning sessions, right? And even though you were in the coaching room, you didn't get a lot of chance to understand the fundamental stuff. So now that you're retired, you can start all over again and go and get the basics really, really down solid. Right? Because you were with us for a week or two and then you'd be off flying, then you'd be for a week. Now you'll have the continuous time. Right? So I suggest you go back in. I'll keep sending you videos and just concentrate on what I send you and don't look at anything else. And don't try and correlate what I'm saying with anything else. You'll be fine. Well, that's it for me, folks, this morning. Hopefully that was helpful. And we will see you in RTH. It's good. No, I'm glad you monopolized it because usually nobody says anything. So it's like pulling teeth trying to get people to talk. So I'm glad when even somebody monopolizes it. Hey, Petra, thanks everyone. We will see you guys at 9 a.m. Eastern Time. Thank you very much. I'm JJ, and I appreciate you spending your time with us. We will see you in a little bit. Trade smart out there, folks. We're almost at the weekend. Bye for now.